A very good afternoon to everybody. This is Rashmi Deshpande, partner with Khaitan Company. And on behalf of Khaitan Company and our partner Blockon, let me welcome you to this introduction and cryptocurrency status, cryptocurrency webinar and what the future holds for cryptocurrencies here in India. Before we begin with our first session, let me just give you a small agenda. The webinar will begin with a 10-minute session by me, where I will give you an understanding of what the cryptocurrency is here in India, how it is faring in India, what are the regulations, and of course, what are the main questions surrounding around the cryptocurrency business. After that, it will be followed by a session by our keynote speaker. And subsequent to that, we will have a panel discussion with industry experts and the legal experts. And then finally, we will have a Thanksgiving session by our partners. So without much delay, let me begin with my session. Next slide, please. So cryptocurrency here in India is not something which is very new. Although there is a lot of confusion around cryptocurrencies as to what consists of cryptocurrencies and how does it fare, how does the technology work in cryptocurrency. My first slide is just to give a basic understanding of how cryptocurrency has come into origin and how it fares here in India. So if you all know, cryptocurrency is nothing but a virtual currency. And it is backed by a very robust technology called blockchain technology. And one of the very important features of cryptocurrency is that it is completely decentralized. When I say it is completely decentralized, it means that it is not regulated by any government, any individual, or any country for that matter. It is completely outside the control of the government, or even for that matter, central banks in various countries. Cryptocurrency here in India arrived somewhere in 2012, and after that it started gaining popularity and it reached its peak somewhere in 2017. You're all aware of some of the famous cryptocurrencies like the Bitcoin, Ethereum, XRP, Tron, and BTT. But apart from these currencies, there are around 2,000 plus cryptocurrencies which exist the world over. Next slide, please. Before we understand that what is the impact of a new technology, or rather for a better understanding of a new technology, one needs to understand what is the financial impact of cryptocurrencies. So as you can see on your screens, the current market size of cryptocurrency is around 85 billion US dollars the world. And if you look at the digital assets, it's around 350 plus. And the experts are estimating that cryptocurrency market, which is consisting of your blockchain, which is consisting of your cryptocurrencies, cryptocurrency exchanges, and also for that matter, digital asset, it is going to touch within the range of around 1 to 1.5 trillion USD. So when it comes to, next slide, please, and when it comes to any technology or the efficacy of any technology, higher the volume, the better it is accepted by the public at large. Now, if you see the exponential increase of cryptocurrency in the chart that we have shown you over there, and among the cryptocurrency, we are talking about the Bitcoins, you will see that somewhere from the beginning of 2017 to somewhere in the beginning or probably the mid of 2019, the cryptocurrency trade had reached its peak. And although because of, I would say, the lack of regulations, or in some countries, stringent regulations, the business sort of came down. But nonetheless, the cryptocurrency is still running very, very positively. Now, again, if we look at the numbers, uh, as of today, there are around 80 million Bitcoins which are already there in circulation. And currently they are trading the Bitcoin in specifically the price of Bitcoin is trading at around 9,110 US dollars. Next slide, please. And if you look at the progress also in India, whereas in the world over, you will be surprised to know that as of March 2020, there were around 5.5 billion users or 5.5 investors here in India alone. And the trading, as I mentioned earlier, peaked somewhere in 2017, where around 2,500 investors were investing daily in cryptocurrencies. As the cryptocurrencies and especially the trading in cryptocurrencies progressed here in India, we had a lot of cryptocurrency exchanges that came about here in India. Some of the indigenous exchanges include WazirX, which is there on your screen, Metix, Metic Network, CoinDCX, Unocoin, and many of them. Looking at the potential of cryptocurrency here in India, the platforms like WazirX have also decided to launch around 50 million investment funds here in India. And in the next slide, we will understand that not only in India, but also the world over, what is the funding that is being attracted by cryptocurrencies. Can we just go to the next slide, please? Yes, so as I was saying, you have a lot of cryptocurrency startups, and these startups are actually attracting fundings from really respected players, respected fund managers like Bain Capital Ventures, HDR Group, etc. And the current global price of the fundings is around the funding that has been received by cryptocurrency is around $10 million, out of which it is very interesting to note that Singapore itself has actually garnered $1 billion of investment. Next slide, please. Now, cryptocurrencies, as I mentioned in the beginning of the presentation, have had a very interesting journey here in India. Cryptocurrencies first arrived in India in 2012, and they gained a lot of momentum, of course, thanks to a lot of these IT brains that we have here in India. But at the same time, given the volume that the business was attracting, there were warnings which were given by various government agencies, which included the RBI, the Ministry of Finance, etc. And initially, the warnings, or rather the tone of the warning, was due to the fact that although this technology is new, this technology is garnering a lot of investment. A lot of people are getting attracted. A lot of people are trading in cryptocurrencies. But since the technology is not widely understood, there was a warning given to the investors to tread carefully. However, if we look at 2018, that was the time when first time RBI came up with a circular. The circular did not say that we are banning the cryptocurrencies or anything like that, but the circular actually stopped the banks from trading or doing business with cryptocurrency exchanges. As most of you guys would be knowing, this circular was challenged in the Supreme Court, and the Supreme Court has found this circular to be unconstitutional. So the circular is no longer there. But at the same time, while the case was still on in the Supreme Court, there was an inter-ministerial committee which was constituted, and it sort of recommended, and they were very harsh recommendations to actually ban the cryptocurrencies. And as of today, as late as March 2020, the Supreme Court judgment came, and when we are looking at the latest reports do say that the bill or any kind of regulation which the government has in mind are going to be very stringent. So I understand that given the fact that cryptocurrencies have been trading in large volume and considering the volumes involved, there is a necessity for regulations to come in. One needs to understand whether the regulations are here or should the regulations be here to completely ban this new technology, or should they regulate it in such a way that the technology flourishes, but at the same time, the interest of the investors, the interest of the common man is also taken into consideration. So with that, I come to the end of my presentation, and I would like to now invite Mr. Garg, Mr. Subhash Chandra Garg, who is our keynote speaker. And I am pretty sure when it comes to the cryptocurrency world, Mr. Garg does not require any kind of introduction. Nonetheless, I would just like to give a small background of Mr. Garg. Mr. Subhash Chandra Garg is a 1983 batch IS officer of the Rajasthan cadre. He has served as the Economic Affairs Secretary and the Finance Secretary of India. He also headed the Inter-Ministerial Committee on Virtual Currencies, which I spoke about a while ago, constituted by the Government of India. Mr. Garg was the Executive Director in the World Bank Group for Bangladesh, Bhutan, India, and Sri Lanka from November 2014 to July 2017. And apart from this, Mr. Garg also served on the board of the directors for the International Bank for Reconstruction and Development, the International Development Association, collectively referred as the World Bank, the International Finance Corporation, and the Multilateral Investment Guarantee Agency. He has occupied various senior positions in the central government and the government of Rajasthan. So, Mr. Garg, I would like to invite you to give your keynote speech. Thank you, Mr. Garg. Sir, if you could just put on your camera. And sir, you'll have, yeah. Thank you, sir. Welcome.
Thank you, Rashmi. Thank you very much. Nice to be with the crypto community largely in today, this afternoon. What I'm going to do is I will explore two basic policy trends in my 15 minutes of the keynote address. The first one is the issue connected with the cryptocurrency as currency and the entire movement towards moving from paper currencies to digital currencies, which also includes now the proposals for central bank digital currencies and also what I have proposed in one of the papers as the DMAT currency as digital currency. So that's one stream of thoughts which I would explore. The second one is the cryptocurrency basically arose out of the new technological innovation called blockchain technology or distributed ledger technology, which is very useful in creating and delivering several services, including creating a commodity or an asset called cryptocurrency. So how does that strand of thought or developments span out going forward, and how should we deal with it? So these are the two broad issues which I'll take up today. Let me begin with the first one. I don't think this community needs any introduction, but the currencies have evolved, and the currencies as money function carry out the key function of sort of interposing between two commodities and services for being exchanged. So when you let us say buy anything, a television or anything, you use the currency to make payment for the TV set you bought. Likewise, when you sort of sell something or any services. For example, somebody in Khaitan Company sells the legal service. The service is valued in terms of the currency and the money, and is paid in the form of the currency, right? So currency carry out an extremely important function of enabling exchange of goods and services in the economy, of making payments. And that is why ever since the humanity started producing for other than oneself, some medium of exchange has to come and was evolved for carrying out or enabling carrying out of these transactions. We had barter where goods were exchanged for goods. Then the first major innovation of currency came when the metallic currencies came into being. The gold and silver served for currency for many, many millennia. When its limitations came into existence and it was recognized, the trade expanded, but the gold and silver supply could not. And there was also a lot of other limitations of handling gold in terms of commodity, carrying it out, etc., distances, value. The next sort of evolution in currencies took place, and which is the paper currency. Paper had several advantages: light to carry, very easy to print, lot of cost control, no constraint of the availability of the currency. As much economy needs, so much you can provide, and therefore all over the world the paper currencies came into being. Initially, paper currency was linked to the gold as gold standard, but after 1971 and all, the paper currency went off any metric standard, and we have pure fiat currency as the value exchanging currency. We should appreciate one critical difference when we moved from the metallic currency to the paper currency. Metallic currencies were the ones which had intrinsic value. You can express everything else in terms of the value of that intrinsic metal. Gold had a certain kind of value, so you can express everything else's value in terms of gold, and so is the case with the silver and things like that. But paper currency had no intrinsic value. Paper currency's value is maintained by the central bank. Earlier it was the government, but now it's the central banks in most countries of the world. And that is very finely done by regulating how much of the currency you can sort of print, circulate, things like in relation to the economic need of the country. And if your currency serves as the international mode of exchange, for example, the US dollar, which is the prominent mode of exchange world over, you need to take into account the global economic need for the currency. And that is how the value of the currency is maintained. Whenever you had lax sort of policies, you issued more currencies than what is needed by the economy, the inflation came over. We had high and many episodes of very high inflation for many years. The world learned how to control it, and today in most countries the value of the currency is comfortable, though there are episodes of inflation in some part of the world even today, and the inflation is nothing but sort of diminution in the value of currency, paper currency issued. So paper was serving very well the need for the currency many years, and then the innovation of sort of information technologies came in, which transformed the paper currencies deposited as deposits in the banks also to be used as means of payment. And today most of the transactions actually are carried out in terms of value by digital means, by making digital payments. There is no exchange of physical cash in over 90% of transactions in India in terms of value. But when it comes to in terms of volume, even today about 80% of the transactions, and most of them are small value, are carried out by means of physical exchange of coins or notes. But a large amount of international payments and otherwise are taken by means of digital means today. A lot of innovations have taken place after the core banking solutions came. And today, for example, UPI itself has transformed all the banks' accounts into one single repository or a wallet, so to say, of which everyone has a piece of that. And today UPI can facilitate transactions without any hitch, instantaneously, without the need for paper currency. So a lot of digitalization of the currency function has taken place. Though let us remember the fundamental base is still the paper currency, and the value is expressed in terms of the value of that paper currency which is in circulation. So that has happened so far. Now there are some limitations of the paper currency itself which are being recognized. You have to still exchange notes if you want to make payment in cash or by means of physical currency. Carrying large amount of notes becomes difficult. And when you have now better means coming up, the digitalization of the economies and the businesses is taking place for all your entertainment, sports, almost many things, and many services today are delivered digitally. Is it time for us to think of a digital currency? Now that is where the cryptocurrency options come as something which is relevant as a currency option. Now the private innovators have sort of designed, used very creatively the blockchain technology, and have created the currency in the form of computer code. For the ease of reference, I would just call it code, and that code is what is offered to serve as the currency. The Bitcoin example was given very well by Rashmi, and so it serves as a means of payment. It is valuable in its own right. So people, when you were expressing that people make investment, they make investment in Bitcoins and other currencies as something which is a valuable and investable kind of good or financial investment. But it also serves to some extent the function of making payments. That is where it sort of interfaces with currency space. That is where I think we should evaluate very carefully what are the digital options for making the digital currency. Let us say from the paper note rupee to a digital rupee. Obviously, the DLT based cryptocurrency or virtual currency is one such option. There are other options also. For example, I have argued that why not make every note, every bank note, as a dematted note. We have converted our securities into dematted securities, and every exchange and transactions in the securities take place very easily by transferring beneficial ownership from one to another. Likewise, if we conceptualize the dematted currency as the currency which resides with all its numbers, etc., in a depository, and everyone who has currency in his account or in his wallet has the numbered currency holding on, and whenever you want to transact and make payment, you can make the payment by transferring that that currency note, digital currency note which you hold easily by means of today your mobile, your many other devices. You can swipe it on the device where you buy and things like that. It's very easy to sort of transfer and use. I personally, and there is another option which now the world is examining, that is the central bank digital currency. I think if you look at the literature, I think the best expression of what options we have as the central bank digital currency. The World Economic Forum of the United States came up with a very detailed toolkit for policymakers to design and implement the digital currency or the central bank digital currency in the world. There are some efforts which are going on in some parts of the world, but if you read that toolkit very carefully, what it also tells you is that the cryptocurrency based central bank digital currency is one of the options. Then there can be any other options as well. So what I would suggest today, I wouldn't harp on it too much today. Let us not get besotted by the cryptocurrency or the digital or the cryptocurrency based on the distributed ledger as the only means of central bank digital currency. The dematted currency can also be the central bank digital currency in that form. In my judgment, that appears to be the best option, the least cost and very easy. It can replace the paper currency and the coins very easily, but I think I will leave at that. Why do I say that the cryptocurrency, especially the private cryptocurrency, is not a good option? And in this case, I would also bring to the fore on the discussion table the work which was done by the committee which I chaired. The way the cryptocurrency works on the digital or distributed ledger technology, it's not a common man's currency. I think, let's believe it. It's a high investment kind of thing. You have to invest in computer power, etc. It can never be a common man's currency. Secondly, the private part is the most dangerous. See, the currency, as I said a little while earlier, the currency, especially when it is not a commodity with intrinsic value, the value has to be maintained by a regulatory authority, a central bank. Otherwise, if anyone can issue any amount of digital currency or cryptocurrency, there would be no value as currency. And that is what is reflected even in the most stable sort of distributed ledger-based cryptocurrency, the Bitcoin. Its value has also fluctuated. Currencies cannot fluctuate like this. And currencies have to be used as the one in which the value of others are expressed. Here we have a problem that the cryptocurrency or the private cryptocurrency's value is expressed in some other currencies, right? And therefore, the cryptocurrency, the private currencies can never, in my judgment, will work as the currencies for the world. Now I come to the second part of it, where the cryptocurrencies as an asset or as a commodity, and the DLT as the technology for use in the financial system is concerned. I think, and that report also says voluminously, that DLT is an extremely important innovation in the digital space, in the digital technology space. It can be very gainfully used in carrying out financial transactions, in trade, in KYC, and in many other things. You can create a lot of services based on DLT technology, right? And it's also possible to make payment for them using the traditional paper currency or the digital currency as we evolve. It's not necessary to make payment using the cryptocurrency as such. And therefore, the two should be de-linked, the cryptocurrency and the DLT's use in the financial technology or financial services space, or for that matter, any other space. And that is what we should be doing. The last point, and I'll stop after that, the cryptocurrency, and if we don't call it currency, if we call it crypto asset, I think we describe it better. The crypto asset, and I think that is where the Supreme Court judgment also comes in. The crypto asset is anybody is right to create a digital asset, so to say. And here the value, I would say, lies in the eyes of the or in the mind of the holder or the beholder, whichever way you want to put it, right? Just visualize the gold. The gold had intrinsic value, but the gold's intrinsic value also in a way is determined by the people who assign that value, right, to the gold. Silver was also considered valuable for many centuries. Silver and gold had a ratio of, let us say, 1 to 15. Even in India, the silver and gold were sort of exchangeable in the ratio 1:15. So 15 kg of silver equivalent to 1 kg of gold. But over the years, silver has lost value, and today it's about, let us say, 90 to 100 times more or less valuable than gold. So, but the value is assigned. Diamond, take example of the diamond. Diamond does not probably have any value, as again it's a pure carbon, but the way it's supplied, the way it is sort of fined and marketed, it also has created it's created value. Likewise, I have no quarrel if somebody wants to value a code which is in the form of crypto asset and want to invest in it, it can do in that form. In that way, the crypto asset is a commodity, not a cryptocurrency, right? And the crypto asset as a commodity should be and can be regulated as a commodity, like any other commodity regulation which we do. And most commodities are not sort of regulated as such. And therefore, if the policymakers decide that the crypto assets as such are regulated or not regulated, one can do it. One has to keep only one thing in mind, that the crypto assets has the potential of being sort of valued much more beyond what sort of most people, and in that case, situation, there is a potential for some sort of scam taking place, some sort of Ponzi value creation taking place, and therefore there is a public duty for the government to sort of protect the gullible people, people who don't know. And that is where even crypto assets, I would suggest that the government regulate this very well and make sure that people who don't understand the crypto assets as the business, and who are, and there have been many instances of sort of runaway value in plantation, in tulips, and many other cases are there in the world, and India also. The sheep farms in Tamil Nadu, so artificial values have been created, so that needs to be protected. But cryptocurrencies have no justification to exist as private, and therefore I stand by the recommendation in that cryptocurrencies, the private cryptocurrencies, should be outlawed, should not be allowed to be operated. And that is where I conclude. My last four crisp sort of conclusions are: the time has come for the digital currency, and the digital currency to move from the paper currency. And best option in my judgment is a dematted digital currency as the replacement of the paper currencies first. Second, cryptocurrencies, the private cryptocurrencies have no justification to exist and are unlikely to exist because of its fundamental inconsistencies and the improbabilities of it actually acting as the currency, and therefore that should be sort of outlawed. The crypto assets as commodities are and should be allowed as freely tradable kind of thing, but with appropriate regulation, where the gullible people and those who don't understand these are protected, and that's a public duty. And lastly, the DLT, the distributed ledger technologies, is a very, very promising technology, and its use in the financial space is very promising, and therefore that should be very, very much promoted. Of course, it's not religion. We should not promote it as a only preferred option. It should compete. There are many technologies which keep on evolving. It should compete, and if it delivers that kind of value as a service, I think that should be promoted. I'll stop here. Thank you.
Thank you so much, sir. Thank you so much. It was very interesting to hear your thoughts, the insights that you gave, and how you have justified that you are sticking to your report, which is very interesting. Thank you, Mr. Garg. Now, I open this webinar for our panel discussion. And our panel discussion, of course, consists of Mr. Garg, myself, and we have some industry experts as well. So let me introduce you our panel members. We have with us Nishchal Shetty. Nishchal Shetty is the founder and the CEO of WazirX, India's largest cryptocurrency exchange. He is a leading blockchain advocate and influencer with over 70,000 followers. And Nishchal has also been active in this space, and he's also fighting something called India Wants Cryptocurrencies, which is over 600 days. And also he has been awarded Forbes 30 under 30 and has built a SaaS startup with 20 million users globally before this. So I welcome Mr. Nishchal Shetty. We also have with us Mr. Siddharth Sogani. Siddharth is the founder and the CEO of CREBACO Global, one of our partners, which is a research, intelligence, and rating company focused on blockchain and cryptocurrencies. Siddharth is a double master's in international trade, banking, and finance, and a specialist in foreign trade, and is also a certified Bitcoin professional. CREBACO works with governments, regulators, SEZ, VCs, and projects to build and share the most reliable databases and setting new benchmark for the industry. And also, Siddharth is also a partner in Block Next Solutions LLP, which is a tech consulting firm. And also, from the legal experts, we have our very own partner from Khaitan Company, Sanjay Khan Nagra, who specializes in corporate and commercial practice of Khaitan Company. He also specializes in private equity, venture capital investment, and private and public M&As. Sanjay takes keen interest in the interactions of law and technology, and fintech matters in particular. Sanjay regularly advises on blockchain, cryptocurrencies, online lending, and payment-related matters, and has also advised various domestic and foreign cryptocurrency exchanges. So welcome all of you. You have heard Mr. Garg's view. Now let me start by asking this to Nishchal, because he is the one who is representing the industry. Nishchal, you have heard what Mr. Garg has to say, his thoughts and his opinions, and we have been reading his blogs also. There are some major apprehensions which Mr. Garg has kind of pointed out. And since you are in the midst of this technology and you understand this technology very well, I want to know from you, what are your thoughts? And is it something that you can say to probably circumvent the apprehensions which Mr. Garg has pointed out? Nishchal.
Sure. Thanks, Rashmi. It's great to hear you, Mr. Garg. So I think the first important thing, it was good to know from this talk by Mr. Garg, is that his apprehensions lie with the fact that crypto is here as a replacement to INR. That's something that he does not really approve of. And I think in a way, even as an industry, we are not looking at it as a replacement. What we are looking at is cryptocurrencies in general enable a lot of new transactions that have not been possible today with the traditional currencies. And I'll give you an example. I think the first example is we have Ethereum blockchain. where you can actually run code on a decentralized network. And to run this code, you need to pay money or currency. And the only way to make this payment is using Ether, which is a cryptocurrency. So the idea that cryptocurrency is a replacement to the traditional currency is not really something that the ecosystem, the crypto ecosystem in India carries forward. So, but all of these new technologies, we cannot really pay INR to make use of these new technologies. The only way we can actually access these new technologies is if we use cryptocurrencies. So that's like the first differentiator. I think the other differentiator which actually came out from Mr. Garg's talk about currencies as assets, but unfortunately, I don't see that differentiator really in the draft bill that has come out. Where the draft bill comes across as let's ban everything that has to do with the technology, and let's not participate as a country. So I think maybe there's some misinformation or misunderstanding on the part of the bill, probably the way it's been put out currently. But I'm hoping that if the apprehensions are around the use or replacement of INR, I think when I also look at the INR in the country today, we have a very efficient banking system in India. In fact, one of the better banking systems in the world, where we can actually make payments for free using INR to anyone in our country today and instantly. So, it's sort of a solved problem in our country where payments is not really something where I think cryptocurrencies can even enter and try, because our payment system are so robust. But like I said, the systems where you cannot accept INR at all, which is like how I told about Ethereum, that's one. The other example I'll give you is of micro transaction or micro payments on the internet. Now, today, we either access things for free, or we end up paying, let's say, 100 rupees, 200 rupees, or 500 rupees for products. There is a in-between business model where, let's take, for example, for every page view, you wanted to charge 1 paisa. The problem today is that transaction costs will be a minimum of 5 rupees to 10 rupees for any payment gateways today. But with cryptocurrencies, you can actually enable micro transactions where you can make payments as small as 1 paisa without any payment gateway charges. So now these kind of business models have not been possible until now. Others, you would have heard of microtransactions all over the internet. The reason you don't hear about them is because they're prohibitively expensive in the traditional payment systems. But in the cryptocurrency system, you can actually have microtransactions working beautifully. And that's a great business model that the internet is trying to explore. But if we do not get access to cryptocurrency, as a means for us to try out in India, we cannot actually try all these business models. So as an industry, our objective is, can we introduce these new kind of systems that have not been traditionally done in the traditional payment methods? Can we attempt that? Can we try that? So tokenization is the other thing. Tokenization of assets. There's a lot of assets in our country today that can actually be effectively tokenized, and people around the world can probably buy those assets from that belong to India. Now that again is possible with cryptocurrencies. So these are some of the things. One of the other proponents I'm a big proponent of is access to capital. Today, what happens is, I'll give you an example. If you wanted to go for a home loan in India, we have to pay about 8 to 10% rate of interest. But the same home loan you get in the US for 2 to 3%. This disparity exists because today capital is controlled by the geographic barriers, the geographic boundaries. What happens if we can, using crypto, we can make it such that capital freely flows around the world. So maybe if we can enable crypto as a means in the country, we'll be able to bring down these interest rates drastically, because we would get capital access from around the world into India. So I think there are multiple such stuff which we have not seen come out yet. And if we are given the opportunity to innovate, I'm pretty sure we can all see all these innovations. So crypto is not here to disrupt the existing mechanisms. It's to add value to what has not yet been created. That's the objective of the crypto ecosystem right now.
Great, Nishchan. So I would like to move on to Siddharth right now. Siddharth, you heard both Mr. Garg as well as Nishchal and their thought processes. My question to you is basically, do you think that a kind of a regulation, and if at all there's a regulation, what should be the nature of this regulation, which will not only ensure that this new technology flourishes, but at the same time, the what the government is apprehensive about, that the interest of people who are investing in, not the common man, because we know common man is not investing, but those who are interested in investing, their interest is taken care of. What should be the nature of the regulation?
Um, Thank you so much, Rashmi. And it's a pleasure to be on a panel with Mr. Garg, Sanjay, Nishchal, and you. Um, so, see, cryptocurrency and blockchain ecosystem is a very unprecedented technology. We haven't seen something like this till 2009, and it is still evolving. And honestly, it's a new complete ecosystem and an asset class, which, if not understood in the right manner, a lot of misconceptions can evolve, right? You need to understand, because it's a new ecosystem. The Alfred Marshall of this ecosystem isn't born yet. You know, it's something which you learn from practical experience and not by books, because the books have not been yet written. So I don't. I expect a lot of misconceptions coming from the governments and the regulators who we have worked with, and it's normal to ask such questions. But I would say that for example, the Wright brothers who invented the aircraft did not have a pilot's license. When they made that aircraft, they tried, they experimented it, and later on, after a few years, the first license was issued and regulations came in so that the people who are traveling, they don't face any consequences. And today the aviation industry is over $850 billion globally. We should give crypto a chance to prove its relevance, and only then, once it reaches a state of maturity, regulators should come in. It's like when you are driving your car at a speed of say 20 or 30, you don't pay much attention. But when you reach higher speeds, that is when you need more focus and concentration. And the regulator's job is to drive that thing in the right direction and help the ecosystem develop, and not abort it. The draft bill, like how Nishchal and what I have understood before, is very clear on saying that anything in this ecosystem should be stopped. So which is not a right approach. And when we see that the G20 nations, I think 19 of them have 18 of them have regulations in place. They are either partly regulated, or at least they are not considering it as a criminal activity, or they are letting it evolve so that they can have a better control over it at a later stage. And yes, government, another aspect which I have realized in these last 3 years since I've working in this ecosystem, is the government has this apprehension of the transactions are not getting monitored. They consider this to be they relate Bitcoin with criminal activities and money laundering and all those things. There are already solutions for it. The industry in 10 years, it has evolved with solutions, and because it's a free open source technology, there are already solutions for it, and the government must understand that these solutions are there to solve the problems, at the same time letting the industry grow. So uh, it's nothing to be afraid of and ban it, but rather to help it grow.
Great. Thank you, Siddharth. Let me go over to my fellow lawyer, Sanjay. Sanjay, you have heard everybody now, and we as the lawyers are a big proponent of bringing in regulations so that we can interpret it the way we want, of course. But we have seen a lack of regulations so far, and whatever the regulations are coming, they are coming. There's a news that they are going to be stringent. But you have worked with a lot of cryptocurrency platforms yourself. What are your first thoughts on what Mr. Garg has stated as his apprehension, and what Nishchal and both Siddharth have said that there is nothing to worry about. What are your first thoughts?
No, there's enough to worry about always, and I'll tell you, it's not only crypto, and I work with the government of India on Startup India and other regulations which are startup centric. I can, from my experience of a decade, can tell you that regulating innovation is the most difficult job. And Mr. Garg will probably agree. Whenever you sit and decide to regulate something innovative, you give rise to something called as regulatory arbitrage. By way of example, if I ban something right now, people will find out other ways to deal in it. People will find P2P ways to deal with it. People, if you ban banking, people will find non-banking system to approach the same thing. So I think whenever we talk about banning something or regulating something, and it is in the domain of innovation, it is important to understand what problem are we trying to solve for. And I'll give you a few examples, and please stop me wherever you think I'm running out of time. The first and foremost thing is to understand what is the industry's perspective, and I'm very glad that Mr. Garg has agreed to be a part of this discussion, because I've frankly not seen too many discussions happening like this about cryptocurrency in India. And I think that is, like, for instance, I'll just take you back some 30 minutes before. Mr. Garg said that maybe we can try and regulate it like a commodity. Now that's one of the pillars. Like, if I may recap for the audience, there are three pillars in which a crypto can typically fall. It could be a currency, it could be a commodity, or it could be security, right? These are the three broad ways. And like Mr. Garg said, and Nishchal also alluded to it, the very nomenclature was probably incorrect, right? It is unlike a virus in a computer system is not the same as a virus outside. It was discussed in the Supreme Court case also. Currency, merely because it is called currency, it need not have all the attributes of currency, and therefore maybe it is not seeking to replace currency. Maybe it is seeking to augment what is the existing fiscal system across the globe. And which brings me to the second point that I wanted to mention, that any regulation of this sort, Siddharth alluded to it, that it is transient. It is not a particular problem of India. It is something which I can use here and subscribe to something in the US. So therefore, any regulation seeks to create a system which is effective has to be supranational by definition. And FATF, we all know, Financial Action Task Force, for its members last year came out with something called as a travel rule for cryptocurrencies. It said that countries who are looking at regulating cryptocurrencies must ensure that those regulations capture all the details about AML, CFT, etc., and all the details are then provided to the person to whom the next set of transactions are made. And to my mind personally, I would be very happy if a discussion like this keeps happening in the present space, so that at least we understand each other's perspective and maybe we'll arrive at some sort of consensus at one point. Last point I want to mention before I give it back to you, Rashmi, is that banning it is maybe regulators have a thought process there. We have our own fiscal system. It is anti thesis to the entire fiscal regulations which have developed across the globe for the past 100-150 years. But unfortunately, it is out there in front of us. We can't really help it. And it has grown to an extent that it is maybe too big to ignore. It is too intertwined with a lot of existing fiscal systems to ignore completely, and therefore maybe just looking the other way and saying that, look, we don't want anything to do with crypto is probably not the solution. The right approach may be, like Mr. Garg suggested, to find out a way in which we can effectively regulate it. And I'll give you a couple of examples. Japan has tried to do it. China has tried to do in some fashion, and China tried to ban it. Despite that so-called ban of China, which is not the same as India, China's ban has not stopped a majority of miners being in China even today. A lot of exchanges moved out of China, but Chinese continue to trade in cryptocurrency more than any other nation. So therefore, a straightforward ban, which China also tried to impose and is trying to create a digital currency of its own, is probably not the best of the solution. And maybe there are learnings there we should pick up and maybe learn from there. The other learnings from larger democracies such as Japan and America are some points which we can consider. And I'll just make one point: how people in say Japan, America, and other jurisdictions are trying to regulate, they regulate the entry and the exit point. So when you buy cryptocurrency, you figure out what was the source of income, how did the money come, money was the black, white, normal banking channel, etc. And when you exit the cryptocurrency ecosystem, how are you exiting? Who are you exiting to? In between, while you are in this crypto, that I think is a very, very important system. And there, the regulators across the globe have tried to figure out, because see, it's by definition, it's distributed ledger technology. And because it is distributed, everyone knows what's happening in between. And therefore, it is actually a very good tool, maybe for the governments to work with and figure out where the money is going.
Yeah, Sanjay, great. I mean, point taken. I think that's a very good point that you have made. I want to come back to Mr. Garg now. Sir, you have heard everybody, especially the voice of the industry, what exactly they want to say. Now, I would like to hear your comments also. But before that, there are a lot of questions that we are receiving from, which we have received from audiences. What they basically...
Can I comment on these very valuable contributions which have been made so far?
Sure.
And then you can come up with additional questions.
Sure, go ahead, sir.
Right. See, the three very valuable contributions which have come up, essentially, I think, raises 3 or 4 basic issues, right? One is, and this is Nishchal also said, others also sort of corroborated that the principal intention of the crypto community is not to create an alternative currency. They don't want to create currency, but they want to use or have some way of making payments within the closed values or the tokens or the assets which are created using the DLT technology. This is what you are saying, but this is not what the global development of cryptocurrency is about. It's being used extensively in making payments. And in fact, when you also say a little while earlier that you can access the American loans at lower rate of interest, etc., and that can only be delivered by way of making sort of payment of that loan to you. So you then also sort of don't want to eliminate the use of the cryptocurrencies as a currency. I think please sort this confusion out, right? And that is where if this can be sorted out only by sort of restricting or confining the crypto, the distributed ledger technology based crypto assets as commodity, as assets, not as currency. And the bill which was also brought in targets the cryptocurrencies as currencies. It doesn't say anything about, because the commodities are not generally regulated in the country. Though there are some trading which are regulated, so future contracts in most commodities take place through derivative exchanges. Some of the commodities like gas and electricity are traded on the electricity and the newly created gas exchange, etc. So the crypto asset as asset, for whatever it's worth, I don't want to get into that, can be sort of dealt with there. But there is absolute need that it's not impinging on or it's not transgressing into the territory of currency. Until that confusion, unfortunately, the DLT as a technology essentially evolved as Siamese twin to the cryptocurrency. DLT technology is not at all objectionable. This needs to be separated. The report, if you read very carefully, speaks eloquently about the virtues of the DLT technology, right? And the kind of applications it can create. And on currency aspect, last comment I'll make on what Nischal said. I am aware there are ways in which many times the clubs and the sort of communities operate and use a payment system within the community, right? And that's so. You go to some malls in the country. The moment you enter, you probably exchange your currency notes or credit card by taking some coupons or tokens from there, and then you use and make payment in that, right? It's a very simplistic example, but you have several ways in which within that confines the payment can be used using any digital technology. There are various, I'm even aware of the international networks where the trades are settled in the kind of artificial currency which they have created for the club, right? So to sort of bypass the limitations of the dollar as a currency. So if for the sake of within the community some sort of method of making payment, and you use some crypto kind of method to make payment, I don't think that's currency. I don't think that's what is violative, and that should be buried. So you can take care of that aspect as well. But until the currency, and there is no one who has any authority other than the central bank and the government to issue currency. And if you issue currency privately, as I said, I don't want to repeat, it will not fly. It can never have the intrinsic value or a controlled value to determine everything else's value. So currency, it can't work. So this is the first issue which I thought I would comment on.
So I just also want your comments, because these are the questions that we have received from many of our audience. Now, while what we have right now, we don't have the regulations here in India, but we definitely have a bill which is there in the public domain. And the bill obviously came before the Supreme Court judgment came. Now, sir, if on one hand, if you're saying that this is a technology which will not survive because of its own issues and everything else, and it can never replace the money, rightly so. My question to you is, if we were very clear that this technology is not something which is going to be extremely robust or change or exchange our paper currency, why do we have absolutely stringent regulations or stringent clauses in the bill which kind of criminalizes retaining the currency? And when I talk about criminalizing, I talk about punishment which is as stringent as 10 years of imprisonment or 25 crore of fine. Why do the bill, I mean, still it's a bill, it's not a law. Why is the bill so stringent then?
See, in this case, you have to equate it and you have to treat. Unfortunately, that is the true part. It's like a counterfeit currency, right? And how do you treat counterfeit currency? So if somebody today sort of come out with a fake 1,000 or 500 rupees note or 2,000 rupee note, the law prescribes, in fact, it's part of the anti-terrorist act, and the criminal penalty associated with that is as high as 10 to 25 years. So so in respect of its use as currency, it's nothing more than or nothing better than a counterfeit currency, right? And therefore you have to treat it like that. I think you guys need to get over the difference between the currency. No one has any right to come up with any counterfeit, fake, or duplicate or substituting kind of currency. But crypto as an asset, you see, you have work of art, many people don't like MF Hussein's lines, but some people pay thousands of dollars for those, right? It's that value. I have no problem if some cryptic code is being paid in $1,000 or $9,000 by the people. It's their money. They can burn it. They can do it. They can value it that way. That's fine. But that is the use to which you can put it, not as currency. Until you split this basic issue out, and so let me bring the other dimension, which was mentioned by our three colleagues. You see, it's easier to say that international money or funds can be accessed using cryptocurrency technology as if you allow. So example was given, there is a rate, the interest rate is higher in India and the interest rate is lower in the United States. And therefore, I think presumably what was said was that somebody can access loans from American sort of banks or credit associations and then use that loan money into India for constructing house. Then only you can use it relatively cheaply at lower cost. That's the idea. But that's not the way it happens. Even if you use if you use a, let us say, cryptocurrency to buy a loan there, or you convert the loan taken in America in cryptocurrency and then withdraw it here as Indian rupee and then use it. This would involve the use as currency, and this will not be permissible. This is not possible to happen unless it is happening in a very clandestine manner. How would you exit, or how would you bring that loan which has been taken in America into Indian rupees? So that is in fact, the main motivation for most of the crypto enthusiasts to bring it is to sort of reduce the international cost of transferring money. That is what was the fundamental reason. Indian labor in UAE and elsewhere was paying as high as 6% to get their money transferred to India. And there are some part of the world where the cost of transfer of money is as high as 20%. It is unconscionable, and therefore solutions have to be found to make it cheaper, make it more. See, today international banks, so just look at the UPI. UPI has brought, or the NCPI has brought all the banks' accounts into one place. It's not there today, but tomorrow you can visualize the international banks also coming under one global NCPI, right? And if that happens, it would be possible to transfer your money from your account in United States or UAE to India as costlessly as you do it within India. So there are options which are we tried. So in State Bank of India enter into some transactional relationship with American banks, and today the cost of transferring funds have come down to very low levels. Likewise, in the today, see, it's also a question of policy. Rupee we consider, or cash we consider, as costless, but cash also has a printing cost. Cash has a storage cost, etc. And let's, for the sake of argument at this moment, assume that it costs about 1% of the cost to run the system of banknotes. Who bears this 1%? This is borne by the Reserve Bank of India, right? Because the Reserve Bank of India gains a lot by issuing the currency notes. It is incumbent that the cost of running a digital system of payments is borne by the central currency issuing authority, and then it becomes costless. So imagine today, for many months, it is already also the case. The IMPS and the not RTGS, but NEFT system, and the UPI functions without charge to any cost, and therefore there is no cost to digital payments. If that is the case, the cryptocurrency based 1 paisa solution is not required. 1 paisa would be costlier than the solution which we have today. So I don't think the crypto based solutions would also be cost effective. So therefore, just to summarize this discussion, I think the only legitimate place for the crypto assets to survive and thrive is as commodity or as assets. So you can invest into those assets, and that is where it should be appropriately regulated, and that's a legitimate business to do. We have to protect the gullible people, the non-knowledgeable people. That much the public duty should be done, and then they let the crypto asset community thrive.
Absolutely. Thank you, Mr. Garg. We just wanted to announce to the audience that we are extending the session by 15-20 more minutes, because obviously the discussion seems to be becoming very, very interesting, and we have really opposing views on our panel. So Nishchal, let me just quickly come back to you. Of course, I want your thoughts on what Mr. Garg said, but at the same time, I wanted to understand from you that you're the one who is representing the crypto community. After the Supreme Court judgment, which was basically in favor of the cryptocurrency traders, have you seen any spurt, or have you seen that things have become a little easier for the cryptocurrency traders, or whether the agencies like the banks and all have become more receptive? What is the industry experiencing after the Supreme Court judgment?
Yeah, so for us, we've definitely seen the ability to do business. It's easier now compared to obviously before, when there was a banking ban. And what I think the last 3 months, because of the lockdown, what has happened is a lot of people are exploring digital assets as a way for them to invest and probably learn how to trade in those assets. And this is more important now in a lockdown where there are not enough job opportunities, let's say in the offline world. But people are looking at digital assets as one of those where if they understand what it is, they want to be early investors. Because as these assets get more and more useful in their own ecosystems, they know that the value is going to increase. So I'm seeing a lot of Indians who are trying to take interest in understanding what cryptocurrencies are, what digital assets are, what are the use cases, and then they're taking informed decisions on getting invested. And that is like, for example, we've seen 3 to 4 times more people in this lockdown trying to learn and understand cryptocurrencies. So that's been a really good outcome. The other is even banks themselves. I've been asked by several of them on understanding how they can get involved in this new technology, because what is happening is they're hearing from their peers around the world on how they are internally learning what cryptocurrencies are, how to use them for the right reasons. Like one of the things about making international payments easier and faster, maybe between all these banks. So I'm seeing a lot of banks taking interest in understanding the technology, how to implement them in their own way, and they are very eager to work with us to enable this themselves within their banking systems. So a lot of interest is definitely coming. And I think just to point to, I think in a way it's very good to hear Mr. Garg point out specifically about payments. And I think as an industry, we definitely do not want to cross paths there. What we want to do is use it as an asset class and help Indians get involved in this, either in creating their own asset classes, or in getting invested in other asset classes that exist now. So I think in a way, if you see, it's a very good eye opener, and it's a very good clarity that has come here. And we as an industry are going to work more towards ensuring that we stay within the whole digital asset ecosystem, because that's where we want to be. I've also told before, like, the payment system is an amazing payment system in our country, at least. And I don't think there is need to innovate on something that has already solved a problem, which is a transfer of money is easy in India. So we definitely are going to look into assets, and it's great to know that there is no worry on the part of the even the committee that Mr. Garg is talking about use of assets, digital assets. I think that's something that we've been waiting to hear, to be honest. So it's good to hear that.
All right, all right. Siddharth, coming back to you. See, we have heard a lot about what India is doing, India should do, should not do, and everything else. I want to get an understanding from you as to what the world over countries are doing. How are they banning or are they promoting? If they are promoting in which way? Because we all understand that this is a multi-billion-dollar business. So obviously there are countries like China, Japan, and everybody else who are invested, and so is US. What are the major steps that these countries have taken, and how are they promoting the cryptocurrency business?
Yes. So as what I have observed from most of the countries and how they are doing globally, let's look at just the G20 nations and not the secular nations, more of democracies here. They have, I believe, realized that Bitcoin cannot be. I'm being specific to Bitcoin because it's currency, and more people have more education related to Bitcoin rather than other technologies. So they have realized that banning it is not even an option because it's a layer over an internet. If you have internet even in the jungles of Africa and you've got internet and a smartphone, you can access Bitcoin. So banning Bitcoin is not possible because wherever there is internet, you can access it. So it's the best to regulate it. How they are regulating is not by completely putting a ban, because implementation of that ban is not possible. If there is internet, people can still access. So implementing that is not viable. What they are doing is they are seeing the industry evolve. They have made standards for the compliances with which the exchanges must follow. They have made the standards for the fundraising which takes place using these digital assets, and they have started using new technologies which monitors the transactions in the ecosystem. So that is what the countries are doing, and their approach is a little in future because they have understood that this cannot be stopped. I'll extend a minute. I just want to come to one point where a lot of people has misconceptions. It's basically it's not a counterfeit because it has its own blockchain, and it's not counterfeiting any currency or anything. It is a debt-free instrument which eliminates the possibility of a counterfeit, and it does not require a third party. So it's like how a 100 rupee note says that I promise to pay the bearer. This means the Reserve Bank of India takes the guarantee of whoever is using that instrument to honor it, right? This is a debt-free instrument wherever who the ownership is exclusive. So if you have the private key, if you have that code, you own it, and the value is not intrinsic. Rather, if you see the history, the value comes from consensus. So if I say that this pen is worth 10 lakh rupees and all of you agree that this is 10 lakh rupees, I can trade it for 10 lakh rupees, right? So it is the consent. It is not the value of this commodity or anything like that. So it must be understood that the value of anything comes from trust and consensus, and blockchain cryptocurrencies is a mathematical code which is all about trust, because maths and computations cannot go wrong. So that is one of the parts, and the more people use it, the more trust evolves. It's like Metcalfe's law of telecommunication. If I have a mobile phone, it has no value, but if 10,000 people have mobile phones, I can make a call to them, so my mobile phone's value increases. So just to summarize that, I think I'll hand it over to you again.
Good.
Thank
Can
you.
I come?
Sanjay, so
I think Mr. Garg yeah, Mr. Garg, go on, please.
I'll
just
tell you a very interesting side to the currency kind of situation. There are three laws in the country which sort of are concerned with the currency, so to say. It's the Reserve Bank of India, which allows the Reserve Bank to be the sole authority of issuing the bank notes and all, right? And there is a coin currency act which talks about the coins, and there used to be a paper currency act which now no longer exists. None of these laws actually talk about banning any counterfeit currency. It actually also doesn't talk about disempowering anybody else to issue paper note or coin, right? You may legitimately ask, then why such a thing for cryptocurrency, right?
Yeah.
Right.
So that when the laws which exist today do not specifically criminalize issuing of even bank paper note or coins for that matter, right? Then why this particular sort of treatment for this one? The way the paper currency system operates, and earlier the way the intrinsic currency, the gold, etc., operated. In the gold and the silver standard, the value of gold outside and the value of gold inside the coin was same. So it doesn't matter. In fact, when the silver coins were introduced in the country in 1835, the law provided that anyone can take any amount of gold or silver to the government mint and can take the coins in return by paying a simple coinage charge. And the reverse was also possible, right? That you take coins and you get the bullion from the mint. Yeah, because there was no difference between the value. For the paper currency, this was always thought that anybody else issues and it has no guarantee of the sovereign will have no value, and therefore there is no need for criminalizing and banning it. And that is the reason why these laws had no such provision of outlying lowing. They said this will be legal tender. By implication, others were not legal tender. But they did not specifically debar or criminalize anybody. I mentioned to you some little while earlier that it is the Anti-Terrorist Act, what we call a UAPA, Unfair Activities Act, where the counterfeit is criminalized. Right? So, in a way, one can use the UAPA or elsewhere for this purpose, but the trouble was, and we had evidence of a lot of people, not knowledgeable people, being sold crypto as a kind of investment which will double, triple, 4 times, 10 times and very soon. And this is not new to India. This has happened in several cases earlier in financial world also, by making deposits that 20% rate of interest, or for that matter, even this spot exchange drama which happened in 2009-10, where people lost about 8 to 10,000 crore based on this greed that you will get 20% or 25% rate of interest. So when this kind of evidence was coming that people are getting missold this kind of product, and all said and done, I don't know, but the greed overtakes a lot of people, not intelligent and smart people like you, but a lot of other people.
Thank you.
Can you believe that the plantation scam, the Pearl Agro story and others which you've heard, over 60,000 crore of money was collected by promising sort of outstanding or out of the market returns if you invest in plantation. The tulip is a global story. So we were very, very apprehensive and very, very clear in a way that we have to protect these people, and therefore currency, which is by implication never issued by anybody in the private system, for the reasons I explained, either you are intrinsic or even not intrinsic, and which is indirectly criminalized by the Terrorist Act itself. For these cryptocurrencies specifically, by the way, just for your information, there is another law now, which is the unregulated deposits banning and act or something, that
Correct.
also criminalizes the unregulated deposits. So it's not unique. The idea, maybe a state's overreach in your judgment, in somebody's judgment, but the state's intent is to only protect the gullible people by some smart people trying to do or make a quick money.
Right.
Thank you. Sanjay, I wanted to come to you. I wanted to understand what is the funding background or funding scenario of cryptocurrencies here in India right now. You have been working with a lot of outside India agencies who are interested in coming in India. So what is that scene like right now?
Yeah, it has changed over a period of time, and Mr. Garg, the law is the Banning of Unregulated Deposit Schemes Act, and I'll just come to how we can also probably derive a lot of learnings from there. Rashmi, to your question, so I've been advising people pre the ban, which was until 2018, during the ban and after the ban, and situation has drastically changed over a course of time there. I think pre the ban, it was most difficult thing to, it was easiest as well as most difficult thing to be a lawyer advising on crypto, because the easiest thing is to say there's no law, you can do whatever you want. But the most difficult thing is then when an exchange comes to you and says that, look, how do I run an exchange because there is no law? So then you apply your mind and think, oh, you need to put your own AML standards, your own KYC standards, etc. So a lot of people who wanted to take advantage of the regulatory arbitrage took the plunge and put the money in. As of now, I think after the Supreme Court hearing and the judgment, the mood is positive generally. But I think a lot of people are generally waiting to see where the government goes, and that is where I think conversations like this will be very, very good. I just wanted to make one point clear for our audience. Primarily, I think the panelists here all know, but it is not a very easy subject to discuss over a 1 hour discussion like this. I'm very happy that come along. Like we talked about Indians taking advantage of low interest rates in America, but India has capital controls all along, and India doesn't have a fully convertible currency. And these are concepts which will come into play every time we discuss implementation of cryptocurrency, regulation of it. I think the key takeaway, at least for me, I'm very happy I can take this away from this discussion, is that there is a sort of middle ground between no regulation, banning, and some sort of regulation in a particular way. Like commodity is emerging out to be the somewhat a consensus that yes, you can probably look at it as a commodity, but Rashmi, you are a tax lawyer yourself, and I would ask you that every time you trade in a crypto, then do I pay GST on that? And there are multiple issues that will come up, but I'm very happy that we are discussing about it. 2 points I will make before I end. My personal experience in advising new age companies and regulators has been that when you're open to a particular area, like Mr. Garg is to crypto, and it is very commendable that Mr. Garg understands more than all of us how this thing works internationally. I think it's important that you take it up and take advantage of it. India has been known for maths and technology, and crypto is just that. It is maths and technology. China is taking advantage of it. I think we should be the first ones taking advantage, create maybe a sandbox. RBI has talked about sandbox, has a particular circular on it. SEBI has talked about it. Maybe why not we come up with a sandbox for a controlled atmosphere regulation of crypto exchanges or something like that. And lastly, I think we have seen it in cab aggregators, we have seen it in drone technology, we have seen it in other new age emerging technologies, that when you pick up something new and regulate it in a particular way, you tend to get the world's attention. And crypto is an asset class which has a lot of potential in terms of making India an investment destination. If India can take the lead, not only the digital currency that Mr. Garg talked about, which India as a country, as an economy can take advantage of, the digital rupee, but also anything to do with blockchain and crypto, if we can take some advantage of it without maybe putting our retail investors on the hook maybe we can do it like that. One example of that is commodities, etc. We have SEBI coming out with multiple regulations saying that this asset class is not available for retail customers because they don't know as much as they should probably know. Therefore, why not probably regulate it in a manner that only certain qualified investors, knowledgeable investors are only allowed to invest up to certain limits. If they go beyond certain, and there are multiple things that we can probably talk about. And maybe I don't know if I can request this panel, but maybe we should have these conversations quite frequently so that at least there is because there is clearly consensus. I mean, before this webinar, we were thinking everybody is looking the other way, and there is a 90-degree, 180-degree turnaround. But I'm really happy that we're doing this. We should do it more often.
I want to ask one question to Nishal before I go to Mr. Garg for his closing remarks. Nishal, we have just recently heard that TCS has come up with a program called COTS, and which is encouraging the cryptocurrency trading here in India. Do you just want to give your quick comments? Because, you know, we understand when we talk about something like a TCS, which is a very well-known company, has been there for a very long time and has been taking a lot of has been working very, very rampantly with the government as well. So if a player like TCS is something which is dabbling into cryptocurrency technology, what do you think? What are the signals which are sent to the general cryptocurrency community, and how do you look at it as in future?
Rashmi,
yeah.
No. I'm just saying it's 4:30. I have to leave.
Sure, sir.
Can I leave? Sir,
why don't we we can keep the questions, TCS questions, for Nishal sometime later. We would just like to hear your last remarks, sir.
No, I don't have any last remarks. I think we had a good discussion, a very extensive one.
Okay. No, it was wonderful to have you, sir. And I think we will close our panel discussion here now. And I would like to invite Mr. Jagdish Pandya. Jagdish Pandya is basically the founder of Blockon, who have partnered with us in this webinar. So, and he spearheads a corporate structure consisting of multiple brands that cater to the entire crypto ecosystem, and he has remained at the forefront of crypto and blockchain development since a very long time. So Jagdish, can you just come in and give your closing remarks on this panel discussion?
Yeah, thank you, Rashmi, for arranging a cryptocurrency regulation webinar in India. I cannot resist myself to express my word of thanks to Mr. Garg for coming especially over here, along with Sanjay Khan Nagra, who is representing Khaitan, Nishal, and Siddharth Sogani. And of course, a special thanks to you for arranging first of its kind seminar that industry is seeing today. I can also say, without the support of crypto community, who is live here, over 350 people at peak time, this would haven't been possible. The media's association, community groups, thanks for your support. And a deep dialogue that helped us understand from ex-economic affairs secretary with an exchange founder, with the diversified panels of a research and intel guy CREBACO, who has provided data insights over here, and the wonderful debate we had. I would like to close this event by some of my thoughts, which I learned during my 7 years journey in cryptocurrency in India, Asia, and other part of the world. The first thing that I would like to share is about the lesson to be learned from the late entrants. So when Ford came, people said that horses are here to stay. And that's what happened during the time of internet as well. So JP Morgan CEO, Mr. Jamie said that crypto is a bubble, but he has to go back from his word. And then he came up with their own JP Morgan coin. Take an example of Facebook, who had outright banned crypto ads, and they have came up with the Libra Association, and SEC has also supported it. And similarly, horses are here to stay was an understatement. Bitcoin is here to stay. And right now, Mr. Yeah, thank you very much, sir. Thank you very much, sir.
Thank you, sir.
Yeah, thank you very much. So, like Mr. Garg stated today, that the problem is we're using word crypto as a currency, which competes as a fiat currency. And these are the few key takeaways from the event. I would like to say that the word cryptocurrency is not here to compete with the fiat currency, but to complement the fiat currency by providing couple of services like microtransaction for digital stated. To our wonderful audience, I would like to say that regarding the remittance or the micro payment cross-border transaction, with the use of Ripple or many other project like Abra, where Tata has invested, a average citizen of Filipino, who is half the population of Malaysia, like 16 million Filipinos are living abroad. Like we have NRIs, they are overseas Filipinos, and they are getting paid $500 to $1,000. When they go to Western Union to send salary, they lose like $30 to $50. Same happens in Africa. And right now, Mr. Garg stated that micropayment, maybe for the unskilled laborers of Bangladesh or India living in UAE, can be paid faster and at much economic transaction. The second thing what he has stated, which I liked, is that we can have crypto as an tokenized asset. So maybe we look forward as an industry for a better paraphrasing or renaming of our asset classes like crypto assets and a better regulation to come forward. But I was surprised when I heard that the current fiat system has failed to control 60,000 crore, which is like a 12 billion, or at that time when dollar was 40 rupee for a companies which are like chit funds and that plantation. The fiat currency do not solve these problems of scam, which was like a $15 billion scams in plantation. He mentioned of chit fund like a scam. We heard of many banking things as a scam. So whether it's a fiat currency or a cryptocurrency, the rules to regulate via better ways of our KYC ML is needed to prevent such scams. And that's why I believe that crypto is loved worldwide. During the recent G20 nation meet, it has been declared, and the fact was reiterated, that crypto is a no risk to financial stability. And in fact, G20 nation committee has ordered, even financial minister and many bankers have agreed, and they ordered FATF to create a better regulation. So we must understand from G20 that we need to regulate this in our nation. Second thing I want to say is crypto ban is not a solution, because outright ban to an emerging industry where larger giants like Infosys is helping Matic to validate its node, or TCS is working for a banking solution for onboarding retail users on its banking platform to buy cryptocurrency using banking interface as a white label solution. This is a priority that's happening in our industry. And at last, I would like to say that India's fight for crypto, which I must congratulate Nisha, which started 622 days before, is going to its next step. That is, India wants crypto regulation now. And like Mahatma Gandhi said, first they will ignore you, then they will laugh at you, then they will fight at you, and finally you win. So we will get it sooner or later. And those who are not supporting crypto want to be a late entrant, like Jamie of JP Morgan, or people like Facebook's Libra. I would like to say, with you or without you, this phenomena is going to happen. And with this, I would like to end my today's closing remark. Before I hand it over to Rashmi, I would like to invite you, because of the limitation of time, we have a special networking event followed by this conversation. And I'm going to send the link of the upcoming event to all the participants here, and I'll request the IT team to support with that particular link. So here is our link to the networking event. You can join here, and all the experts of the industry, including exchanges, wallets, mainnet, advisors, SEOs, STOs, retail advisors, traders, everybody is coming to that event. And this event is in partnership with Inblock's event. My thanks to Abhimanyu and his team. And we will talk over there. Thank you, Rashmi ji, and thank you, wonderful audience.
Thank you so much, Jagdish, for your closing remarks. And I would personally like to thank once again the panelists. Of course, Mr. Garg has left. Nishchal, thank you so much for your insights. Sanjay, Siddharth, very good to have you. And I suppose these are going to be one of the first, conversations that we are going to have on cryptocurrencies. And I believe it's high time we should have conversations, considering this is a very new technology. People are yet to understand, and it has got a lot of potential. So thank you very much. And I would just like to request the audience that there's going to be a poll which will be there on your screens right now. I would like you to just participate in the poll. And thank you everybody once again. It was wonderful to have this conversation.
Thank you so much.
Thanks for having us here, Rashmi.
Thanks, Khaitan and company and partners Rashmi and Sanjay and our industry people to be here. Nishal, Siddharth, thank you very much.
Thank you so much, JP. Thank you everybody on the panel.
Thanks everyone. Thank you. Bye.